Welcome to the Deep Dive. We're here to break down complex topics into, well, insights you can actually use. Today, we're tackling something that might be on your mind, maybe even keeping you up at night: how to start a business. We've got some really solid sources lined up for this one. There's a great step-by-step guide from a CPA and business owner found on YouTube. Plus, we've mixed in insights from study guides, FAQs for new owners, and an entrepreneur's briefing doc.
Yeah, and our mission today is pretty simple.
Yeah.
Give you a shortcut through all that professional advice.
Yeah.
We want to distill it down into clear, easy steps. Think of it like this. You're getting a free consultation right here. This kind of guidance, it can easily cost hundreds, maybe even, up to $1,000 from a pro. We're aiming to give you that knowledge for free so you can put that money and time where it really counts into your business.
Okay, that sounds great. Because taking that first step, it can feel huge, right? So where does someone actually begin? What's the absolute first thing?
The very first step, according to our sources, is choosing your company's name. Sounds basic, I know.
Right, but it feels so permanent.
Exactly. And it is important for legal stuff and marketing down the line. But here's the interesting bit. The advice is don't get too hung up on it right at the start.
Really? Because I know people who spend months agonizing over the perfect name.
Totally. And the recommendation we found is pretty straightforward. Think of the best name you can right now and just go with it.
Huh. So you can change it later if needed.
Absolutely. You can use what's called an assumed name or a DBA, doing business as, or do a formal legal change later. It's usually pretty easy and not too expensive.
Okay, so pick a name, don't overthink it, and move on. That removes a big hurdle right there.
Precisely. It lets you get to the next really critical decision, which is choosing your business structure.
Ah, yes, the structure. That sounds significant.
It is. It really impacts your personal liability, how you pay taxes, the amount of paperwork,
Yeah.
fun stuff. But don't let it scare you off. We can break down the common choices.
Yeah, let's do that. What are the main options, the pros and cons, and when should you pick which one?
Okay, let's start with the simplest. The sole proprietorship.
Okay.
The big pro. It's easy. Very little admin work, usually lower filing fees to start.
But there's a catch, I assume?
There's a big one. No legal liability protection. You and the business are the same legal entity. So if the business gets sued or has debts, your personal assets, your house, car, savings could be at risk.
Oof, that sounds risky.
It can be. Plus, you might miss out on some tax savings down the road, and sometimes bigger companies might prefer working with a more formal business entity.
So when does a sole proprietorship actually make sense then?
It's often recommended for like a hobby business, something you're doing on the side, maybe not taking super seriously at first, or if you're just testing an idea. And hey, if liability is a worry, you can often get professional or general liability insurance surprisingly cheaply, even as a sole proprietor.
Okay, so that's option one. What's next?
Next up is often the go-to for serious single owners. The single member LLC. That's a limited liability company.
LLC, right. I hear that term a lot. What's the main advantage there?
Protection. It creates a totally separate business entity from you personally. That's the key. It shields your personal assets if the business runs into trouble. Plus, the business gets its own employer identification number, an EIN, from the IRS.
Okay, that separation sounds really important. Is it a lot more work than a sole proprietorship?
A bit more,
Mm-hmm.
but generally manageable for a single owner. You get that protection, but usually you don't need a separate business tax return or formal payroll system just for yourself.
And the cost.
There are annual fees, usually state fees, maybe around $50 to $200 a year. It depends on your state. But for many, that peace of mind is worth it.
Makes sense. So, LLC for serious single owners. What if you're already making money or expect to right away?
Good question. That's where you might look at an S corporation or S corp.
S corp. Okay. Why choose that?
The big draw here is taxes. An S corp can potentially offer the most amount of money on taxes in savings compared to other structures if you're profitable.
If you're profitable, there's always a catch, right? What's the downside?
Complexity and cost. You have to run a formal payroll system. That means paying yourself a reasonable salary, withholding taxes like Social Security, Medicare, income tax.
So more admin work.
A lot more. Plus, the S corp has to file its own separate business tax return, Form 1120-S. It's definitely extra cost and extra time involved.
And that crucial point about profit.
Right. If your business isn't making money or it's losing money, those potential tax savings are, well, pointless. There are no profits. So there are no taxes to save. You just end up with all the extra administrative burden.
So for someone just starting out, maybe not profitable yet, jumping straight to an S corp might not be the best move.
Generally, no. The good news is you can usually switch later. You can start as a sole proprietor or an LLC and then elect S-Corp status once your business is consistently making good money.
Is there ever a time to start as an S-Corp from day one?
Yeah, there's an example our sources give. Say you were an employee, and now you're becoming an independent contractor for that same company. You know you'll be profitable right away. In that case, an S-Corp might make sense from the get-go for maximum tax savings.
Okay, interesting. Now, what about the C corporation, the C Corp? When does that come into play?
C-Corp are a different beast. The main disadvantage usually cited is higher taxes, often due to something called double taxation.
Double taxation. That sounds bad. What does that mean exactly?
It means the corporation pays income tax on its profits. Then, if the corporation distributes those profits to owners as dividends, the owners pay personal income tax on those dividends again. So the same profit gets taxed twice.
Yucks. Okay, so why would anyone choose a C Corp then?
The big reason, if your long-term plan, maybe 5 years or more down the road, is to sell your business for a really significant payout.
Ah, the exit strategy.
Exactly. There's a tax code provision, Section 1202, related to qualified small business stock. If everything lines up, it can potentially allow 100% of the business proceeds the capital gains. They're going to be tax-free.
Wow, tax-free gains on a sale. That's huge.
It can be game-changing. But, and this is important, there are rules and exclusions. Many professional service businesses like accounting firms, law firms, medical practices often don't qualify for these Section 1202 benefits. You really have to check the details for your specific industry.
Got it. So C Corp is mainly for that big future sale potential with caveats. And lastly, you mentioned partnerships.
Right, that's obviously if you're starting with one or more partners.
Yeah.
A partnership isn't really a separate structure choice in the same way. It's more about having multiple owners. That group of owners can then choose to structure the business as an LLC, an S-Corp, or a C-Corp, or sometimes a general partnership.
Okay, that makes sense. So the choice really boils down to your goals. Is it a side hustle, a serious solo venture, already profitable, or are you building it to sell?
That's a perfect summary. Your intent really drives that initial structured decision.
All right, so we've wrestled with the name, picked a structure. What's next to actually, make this thing real?
The next step is formally registering that business entity. You make it official with the state.
How do you do that?
You'll typically go to your state's Secretary of State website. It's usually pretty straightforward. You select your entity type, fill out an online application, and pay a filing fee.
How long does that take usually? Are we talking days or weeks?
It varies. Some states are fast, maybe even 1 day if you pay extra for expedited service. Others might take, say, 3 days up to maybe 2 weeks.
And what do you get at the end?
You'll receive your official formation documents. They might be called Articles of Incorporation for a corporation or Articles of Organization for an LLC. That's the paper that proves your business is legally recognized by the state.
Okay, official status achieved. Now, you mentioned the EIN earlier, the employer identification number. You said there was a big money-saving tip here.
Yes, this is huge. The EIN is like the business's social security number. You absolutely need one if you're set up as a corporation, an S-Corp, or a partnership. Even some LLCs get one.
And the tip?
The tip is, get it directly from the IRS website, irs.gov. It is completely free, it's instant, and it's so straightforward to do online yourself.
Free and instant. Why doesn't everyone do that?
Because there are tons of third-party websites and services out there like LegalZoom and others that will happily charge you $100, maybe $200, to do this simple thing for you.
Wow. So they're just middlemen.
Exactly. This is a prime example of cutting out the middlemen. People think it sounds complicated or official, so they pay someone. Don't do it. Go straight to irs.gov. It takes minutes.
That's a fantastic piece of advice. Save yourself a couple $100 right there.
Absolutely. Use that money for something else your business actually needs.
Okay, so business is registered, EIN is in hand. What's the next financial step?
Open a dedicated business bank account. This is critical.
Why so critical? Can't you just use your personal account at first?
Please don't. Our sources really hammered this point home. Do not mix personal and business funds. Keep your business income, your sales, your revenue, and all your business expenses completely separate.
Why is that separation so important?
Several reasons. 1, it makes bookkeeping and tracking your finances way easier and more organized. 2, it's crucial for clear tax reporting. 3, if you have an LLC or corporation, missing funds can actually jeopardize the liability protection that entity provides. It's called piercing the corporate veil.
Yeah.
You really want that clean separation.
Okay, point taken. Separate accounts it is. What do you need to open one?
You'll typically need those formation documents we just talked about, the articles of organization or incorporation, and your EIN.
Simple enough.
Yeah, and a pro tip. While you're there, get a business debit card or even apply for a business credit card. Using those solely for business expenses really helps maintain that clear financial separation.
Good tip. All right, bank account setup. What about the operational side? Licenses, insurance, that kind of stuff.
Right. Step 6 is figuring out and getting any necessary licenses, certifications, and insurance.
How do you even know what licenses you need? It seems like it could vary wildly.
It absolutely does. It depends heavily on your industry and also your specific location. City, county, state regulations can all apply. Often, a simple Google search like your industry business license in your city, state is a good starting point.
Okay, so some online digging required.
Definitely. If you're in food service, childcare, healthcare, construction, many fields have specific requirements. And then there's insurance.
Yeah, what about insurance? Seems essential, but also potentially expensive.
It is essential.
Yeah.
But it might not be as expensive as you think. The recommendation is to talk with an insurance agent from a reputable company. Think State Farm, Geico, companies like that.
Do they charge for that conversation?
Usually, no. That initial consultation is typically free. They can help you figure out what you actually need. Maybe it's professional liability, sometimes called errors and omissions if you provide services, or maybe general liability, covering accidents or injuries. You might be surprised how affordable basic coverage can be.
Okay, good to know. So talk to an agent. Next up, bookkeeping. Sounds like homework.
Yeah, it can feel that way, but it's absolutely essential. Bookkeeping is really just keeping organized track of your company's money in and money out your sales and expenses.
How should people approach this? Just a notebook?
Please know the first rule from our sources.
Yeah.
Don't do it by hand in a notebook. It's just too easy to be sloppy, disorganized, and make mistakes.
Okay, so no notebooks. What then? Spreadsheet? Software?
It really depends on your volume of transactions. If you have very few transactions each month, maybe just a handful, a simple spreadsheet like Excel or Google Sheets can work perfectly fine.
What would that look like?
Just basic columns, date, category, like office supplies or client revenue, amount, maybe a short description. It's straightforward and saves you money on software initially.
But if you have lots of transactions...
Then you'll likely want professional accounting software. Think QuickBooks or FreshBooks. They're much more robust for handling hundreds or thousands of transactions a month. They can automate things, generate reports.
But there's a cost and a learning curve, right?
Definitely. There's usually a monthly subscription fee, and you'll need to invest some time learning how to use the software properly. So choose the system that fits where your business is now.
Match the tool to the volume.
Got it. Any other key bookkeeping tips?
Yes, a critical one, especially if you become profitable. Set aside money for taxes. And don't wait until tax time. You should be making estimated tax payments throughout the year, usually quarterly.
Why is that so important?
Because if you owe a significant amount of tax at the end of the year and haven't paid estimates, you can get hit with underpayment penalties from the IRS. Paying installments as you earn the income avoids that nasty surprise. Good advice. Okay, that leads perfectly into the final step. Taxes, filing the business tax return.
Yep, the grand finale of the annual business cycle. How you file depends directly on that business structure we talked about way back at the beginning.
How so?
If you're a sole proprietorship or a single-member LLC that hasn't elected to be taxed differently, your business income and expenses usually get reported on a schedule, like Schedule C, which is filed with your personal income tax return, the Form 1040.
So it's part of your personal taxes.
Essentially, yes.
Yeah.
But if you're a corporation, a C Corp or an S Corp or a partnership, the business needs to file its own separate business tax return, completely distinct from your personal 1040.
Okay, so separate returns for corporations and partnerships. Now, when it comes time to actually file, what are the options? DIY software or hire someone?
Those are the main choices. You can use software like TurboTax Business or similar programs to do it yourself. The pro is obviously saving money on accountant fees.
And the con?
The con is, well, if you don't really know what you're doing, you could make mistakes. You might miss out on legitimate deductions or credits, costing you money. Or worse, you could make errors that attract unwanted attention, maybe even an audit.
Yeah, nobody wants that. So the alternative is hiring a professional.
Right, working with a CPA or an enrolled agent. It's more expensive, of course, but you're paying for their expertise. They should know the tax code, help you maximize savings legally, and ensure things are filed correctly.
Any advice on choosing an accountant?
Definitely vet them. Check reviews online. Maybe ask other business owners for recommendations. Make sure they're legitimate and experienced with businesses like yours. A possible strategy is to work with an accountant for the first year or two, especially while you're getting things figured out. Then, once your business is stable and you feel more comfortable, you might consider taking over the filing yourself using software to save money long term.
That's a practical approach. Start with help, then maybe transition.
Wow, we've covered a lot of ground. From just an idea to picking a name, structuring, registering, banking, insuring, bookkeeping, and finally taxes, it feels like a really clear roadmap.
It really is. And I think the overall philosophy that came through from the CPA source is particularly empowering.
How so?
It's this idea of giving away actionable, professional level information for free stuff people usually pay a lot for. The core message is that you can start a business, navigate these steps, often for very little money, sometimes even for free, by cutting out those unnecessary middlemen.
Like getting the EIN directly from the IRS.
Exactly. By using the free government resources, by being diligent and following these steps, you can really take control without breaking the bank right at the start.
So we've basically walked through a comprehensive step-by-step guide, drawing from some really solid expert sources.
Yeah.
Hopefully this gives you the knowledge to save some time, definitely some money, probably a few headaches.
Yeah, and lay a really strong foundation for whatever you're building.
And think about it, just understanding these steps, knowing where to get things like your EIN for free. It's not just about saving cash. It's about feeling empowered, right? Being in the driver's seat of your own venture from day one. So, listening to all this, what's maybe the one foundational step you feel ready to tackle first to really get your business idea moving?